Okay, well, thanks everyone for joining us. We really do appreciate you giving up your time, and we hope that we can provide you with some good insights and some new news from our recent survey. We're really encouraged by the level of interest we've had in this event, and I guess it reinforces the fact that there is a universal challenge across the industry on this very subject. You've got a bunch of people here from Beyond Encryption, and so Paul and I are joined by Emily and Sam from our marketing team. They're going to bring us the insight and intelligence to this event, and Paul and I will give you the normal jibber jabber. So with that, I'll hand over to Emily to do some housekeeping.
Thanks, Adam. So a little bit of housekeeping for you all today. We want to keep this session as engaging as possible. So throughout, we're going to be asking your opinion. So along with that and any other questions that you may have, feel free to add them into the chat. My colleague Sabrina and I will be monitoring that throughout, and then we'll answer them at the appropriate point. There will be a discussion after we reveal the insights from our research, where we'll invite people to join the conversation. So at that point, you'll be able to unmute your mics. Turn your cameras on if you're happy to do so. We will be recording this session, so if that's not for you, please feel free to leave your camera off, or obviously make your departure now, but hopefully you'll stay with us. And then in terms of the agenda for today, what we're going to go through, so what's happening with financial services portals, why it's happening, and then obviously collectively what we can do about it. The thing to note about our research findings is that you may find some things surprising and some which aren't. What we've tried to do is draw the parallels between the less obvious results and therefore how it may materially impact your organisation, and some strategies to take back to your business for further discussion.
So, firstly, I wanted a bit of a scene set, really. We spend a lot of time here, as I'm sure others do, talking to financial services providers, trying to put ourselves in their shoes, so to speak. Each of them makes available a portal account for their customers and supplements that in many cases with a mobile application. That's the sort of common practice these days. And naturally, that's about engaging with customers digitally. But usage largely remains challenged. In a lot of cases, more recently, there's been a progressive worsening of those statistics, in fact. Satisfaction scores can similarly be challenged, and as a consequence, portals can bring limited additional value. Part of the reason why I guess there's so many of us here to talk about the subject. And this isn't just the territory of large providers. Small businesses in the advice space and larger businesses in the advice space tell us that their portals in the main fall short of expectations and largely fail to add pace and the value they'd like. With lower visitor levels and login levels, publishing something online can leave those items remaining unread, and there can be issues there in terms of consumer duty, etc. And consumers are often finding themselves in a position where they're struggling to locate what they need. Just shifting the lens slightly, but continuing that theme, and what I would ever want to do during this session is I'd urge them to try and take a position of your consumer, put yourself in your customer's shoes during the session. As consumers, we often experience frustration with portals. Each has different navigation. Each serves us with different services, information, offers, and will have largely different logins. So we find ourselves stuck trying to do a simple thing that we set out to do in a lot of cases. The fact is we have access to an awful lot of them. Some snippets we're going to show you from the research you're about to see will really bring that fact home. So where's Wally? Why have I got Wally up on the screen? Well, what we see from some of those key insights in the research is that we've assumed probably too much. We've built our portals as though they're the only digital account in our customers' lives, one Wally as it might be described. Why wouldn't Wally want to engage with what we try to put in front of him on our portal? We're assuming we're the only ones in the room, the only voice in the room, and the reality is somewhat different. Our portal is one amongst many, many others that and accounts that people hold. If we want to stand out, if we want our portals to engage customers and stop causing that frustration, we need to design them in a way that acknowledges the digital burden that people have today.
So a little primer on the research from me. We conducted a survey with the research company 3Gem on 1,000 consumers in the UK, asking them questions about their digital accounts and their attitudes and behaviours towards them. We also asked a small sample of financial services providers in life and pensions to provide us with some metrics on their portal engagement. We hoped to gain a clearer understanding of this relationship between businesses and consumers via digital accounts from both sides. And I think it is worth noting again, like Emily says, some of the individual statistics are surprising, some of them aren't, but taken together, they paint this picture of a radical disparity between how portals have been designed and what consumers and providers want to get out of them.
So before we move on to the big reveal, in line with this being an interactive session, we thought now would be a good opportunity for a quick audience poll. So there are no right or wrong answers. So the first question we asked consumers was, how many digital accounts do you have that require you to log in? To give you a bit of a steer, we broke these down by various categories. So for example, insurance, retail, leisure, utilities, banking. So have a quick add up of how many accounts you think you have and pop your answers into the chat. And while you're doing that, I'll just give you a little bit of insight from our colleagues here at Beyond Encryption. We asked them to do the same exercise, and actually we underestimated by about 25 accounts each. So yeah, so some interesting ones coming in. So 68, 75, 50.
No idea, but lots. I love that one.
Yeah. 115, okay. 40 plus, approximately 100, okay. In excess of 120.
There's quite a broad set of numbers there, isn't there?
So yeah, it's very interesting watching everyone come up with their numbers. And as Emily said, when you're asked the question, it's quite often that people do underestimate what they actually have, and it takes a little bit to get these numbers out. But the survey results that we had showed that the average customer has the average adult, in the UK has 119 accounts that they are asked to log into. High up compared to everyone's estimates in the chat, or most people at least. Some poor soul had 486 that they reported in the survey. My personal count was 237. So I'm well above average, which is first time I can say that. But another stat which came out from the survey was looking specifically at financial services. The average number of accounts that people held in just under the tab of financial services, as it were, was 21. So again, back to that "where's Wally" analogy. We often think that our voice is alone. So if we look in totality, when we're talking to our customers, so are 118 others. But if we're talking on the subject of financial services, there's going to be another 20 firms which are trying to capture that customer's attention at that time on that specific subject. So it's something that some of the stats that will follow will make sense when we bring that context into play. So just going to try and cast everyone's mind back before we had the invention of digital services. We used that hole in our front door as the pathway to communicate with our customers, and everything came through that one letterbox and landed on your doormat, and that's how we got 99% of the information that we needed. Now, through the invention of digital services, we've turned that one hole in our front door into 119 different places that we expect our customers to go to capture information that we want to tell them about. And that doesn't even get into the conversation about apps. So apps are on top of that, and we'll talk a little bit about apps in the future. But it's not much of a stretch to say, we talk about these customer portals, but in reality, they're company portals. They offer efficiencies to businesses, but we're actually offloading a load of work onto consumers. So this really is the link to disengagement. I'm not going to go through each of the stats on this slide, but what's clear to see is there is a correlation between the number of digital accounts that people have and their disengagement from those digital services. So these samples of the stats are very interesting, but to bring some of that to real life and to sort of drive it home, as it were, if we move on to the next slide, we can see where this really hurts, and this really hurts financial services, is that the higher earners have more digital accounts, and therefore they are the particular cohort of customers that in financial services we'll all be aiming for. Now, they're already full up and tired of online accounts and services. So trying to provide them with another one is not necessarily going to be the best route for you to achieve engagement. Now, that end of the spectrum also applies to the young cohort, 18 to 24-year-olds, the future customers for financial services. And if by that age, some of them will be pre-employment age, are already full of online services and accounts, trying then to capture their attention through offering more digital services is going to be incredibly challenging. So two completely different cohorts here, but both already showing a high number of digital accounts and a low engagement with them.
The next slide coming up okay for everyone?
Yep.
Just in chat. And trust me, by the way, to get the slide that looks like a pair of multicolored pants just to start off with. But aside from the main consumer research, we also took some feedback from a small sample of financial services, life and pension providers in the main, to get a barometer on their challenges in this space. Understandably, the success they may or may not enjoy with their digital experiences for most it remains a closely guarded secret. But anecdotally, this visual does reflect a measure of that feedback. Of course, what we all want is 100% of our customers engaging with us and our goods and services, ideally every month. Mm-hmm. But what was relayed to us was that only 30 to 40% of customers were actually active annually, and less than 20% monthly. We may talk a little bit later on about that definition of active, which of course is pretty important. The important products and services that the financial services industry provides tend to be pertinent at very specific points in our lives, and they don't necessarily tend to attract frequent interaction and attention. People engage with the products they have when they need to or have to, but they don't seem to find their digital accounts very useful beyond this. So the upshot, naturally, is that this gives us little opportunity to provide additional value, build trust, and to help them understand new and valuable services and products that may be on offer.
So this all sounds very negative. The question is, what do we do about this situation as providers of portals? How do we improve engagement against a backdrop of overwhelm and fatigue? There are some key insights that we can take away from our findings. By no means do they reveal all the answers to these questions, but they're pretty telling in terms of how we can start to address this. And if you've got ideas, or if you've seen something that's working particularly well in the market on driving higher portal engagement, then stick your answers in the chat. Some people have just said that they can't access the chat. So if you can access the chat, stick your answers in the chat. This is going to be the source of our discussion later. So the first key takeaway stems from the finding that 61% of people think their pension, mortgage and insurance providers' online accounts are difficult to use. And when we reviewed the portals of our sample of life and pensions providers, we found common user experience issues across all of them. So lots of the portals that we looked at fell down on basic elements of navigation. So no menu, stacked cards across a screen, menus that had too many options or just weren't in the right place. But we also found complex journeys with too many steps for what should be simple processes. With many of these, it was really clear that there'd been an original process, and then features, screens, functions had been added on top of this in isolation without considering the holistic customer journey. And something that's probably quite specific to financial services is that we found multiple instances of different portals with different logins for different products from the same provider. So, for example, one insurance provider provides health, home and car insurance, but they have a separate portal and separate logins that they give their users for each. In fact, that one insurance provider also provides 2 additional portals for specific health services. So if you're really loyal to this brand, you have health, home and car insurance with them, then you're rewarded by 5 different portal accounts with 5 different logins to manage. We also found unintuitive, icon-heavy interfaces, kind of an Apple-esque design in these portals. And this is a really good example of designing a portal in a way that assumes you're the only portal in someone's life. Whereas actually, yes, Apple can use minimalist design because we use our iPhones every day. If someone's interacting with your services once, maybe twice a year on average, you're going to have to do a lot more to guide them through these processes. Now, all of these may seem like basic issues when they're taken alone, but if you put yourself in the shoes as a consumer who maybe this is the only way that they interact with your business, you can see how all of them add up, maybe even just 2 or 3 of them add up to make them see your portal and maybe your brand as an annoyance rather than something that makes their lives easier.
Another key takeaway stems from how easy people find it to actually access those online services. I guess how often they find themselves needing to reset their password, by way of example, something I'm sure we've had to all do in the past, frequently probably. And we also wanted to find out a bit about how people received those different login techniques, these different systems. Logins and passwords are often the highest point of frustration and the biggest hoop people have to jump through to begin engaging with your portal. And the fact that 20% of customers have to request a new account and passwords to access that on a weekly basis isn't a surprise. I'm sure, as I say, we've all experienced it. But it is another piece of friction, just harking on the point that Sam was making, that adds to that whole support burden from inquiries from your customers. Hopefully, things like forgotten passwords are automated processes, but they often ripple through to an increased inbound call volume and therefore cost to your business. Anything we can do to make logging in easier while remaining secure is absolutely crucial. So looking at that, how comfortable people are with different types of login technology, we had a pretty positive response, actually. The idea of a single sign-on process for consumers with all their suppliers really appeals, but sadly evades certainly the financial services industry, albeit significant ground has been made for this in the intermediary world. I hope most of us are likely to be familiar with Unipass, by way of example, which was introduced by Origo back in 2002. I think it's got the largest proportion of advisors and product providers connected to the service. Some of our friends I can see actually on the chat there from Origo have joined us today. But consumers are becoming more familiar with and using password manager systems, for instance. Very useful given today's problem, but I always find it a bit of a strange one. Largely, it shifts the problem, a password access system to access your passwords. Also, those password solutions aren't as tightly integrated as I suspect a few of us would like. You know, the auto-population features to pre-populate those login parameters is sometimes a bit clunky. Obviously, it's set out to sort of streamline the process. Biometrics, I'm sure we're all familiar with that these days. It's something that mobile devices are sort of bred on a daily usage basis. And interestingly, 84% of UK adults have a smartphone, smart device. And that age-old two-factor authentication, 2FA, people are comfortable with 2FA, but you need to make sure the process is seamless. So code to your phone or maybe an authenticator app, although albeit the latter can feel a bit more friction heavy. And yet what we did find is this extra security layer is often still missing, despite the fact that so many pundits, condone that as being the gold standard as it stands today.
So perhaps the overwhelming key insight that we can draw from the report is that people don't want to have to create or log into a company's portal unless they're getting something that they want or need. And that seems very obvious. It's not shocking that people are frustrated creating accounts that they only use once. It's not shocking that they don't want to have to log in to get content they could get more easily through other channels. But people are not designing their portals with this acknowledgement that people aren't getting the value that they should do out of them. And we need to do more to increase the value of what we decide to put behind these login gates.
And a lot of this boils down to fair value exchange, and we talk about fair value exchange a lot with our clients. And this is all about what effort do I need to put in versus what I'm going to get back. And this is a judgment we make every day, every moment of every day of our lives, of everything we do. Mostly it's subconscious, but sometimes there is a conscious element to it. But this hits at the core of why we're fed up with digital accounts as a consumer. We feel that there's an imbalance of that effort required versus what I'm going to get back. So if a communication that we're posting out isn't worth jumping through hoops to read it, then push it to someone. Don't expect them to come and get it and log on and find it and then download it. It's just that imbalance is not going to engender support for you. I guess also linked to that sort of process and theory, when you do have someone's attention and you can deliver them information with minimal effort, then that can lead to greater engagement with other services and portal places that you want your customers to go to. So once you've got their attention and you've got that link, to lead them from there to a portal is going to be more successful. So that's something worth attaching a push and then a pull. So that works very well together. As always, the more targeted, the more personalized the information and communications can be, the more effective they're going to be at garnering engagement. So on the screen there, we've got lots of different mechanisms of communicating with customers. And when we flip that into looking at it from a cost versus engagement perspective, you can see how the landscape is painted somewhat. So we've got in here, and I'm not going to try and protect exactly where any of these icons sit on this in these quadrants, but the quadrants are absolutely the most important piece here. So telephones are very, very high engagement, but very high cost, because it's a one-to-one conversation between the customer and a member of your team. So fantastic, but very costly. Postal comms are becoming more expensive, but we have an assumed level of engagement on post. We put something out there and we assume that people will take delivery of it, that they will open it and they will read it. In reality, we don't know what happens to it. And then on the right-hand side here, we see some of the digital communication methods that exist and how our customers engage with those. So we can provide chatbots and we can provide apps and emails and portals and secure email. We've got Maillock in there, and you will see that they work very well in certain situations, but generally, a lot of the digital services will achieve a lower engagement than some of the more analog ones, and Maillock maybe bucks that trend somewhat, which we're delighted about. But that's a really important element. And on the app front, we should point out that on average, people have 80 apps on their phone. So if we're looking at that as an alternative to adding a portal service, let's go down the app route, you do need to be conscious of the fact that you're also playing there in quite a busy pool. But this this landscape of communication methods is something which is really important to understand, and the bigger the company, the more likely that your customers are to expect you to be able to offer that spectrum of service. But back to that positioning here, one of these takeaways from the session, that only 7% of people said they prefer to receive their documents via a portal versus whether it's post, email, or instant messaging. So if you have got that as a pathway that is your preferred method of communication, you're going to need to expect to put a lot of effort into supporting that as a pathway. Sticking with the pants theme, I've now got a thong diagram, which here is showing that that there is multi-channel communication strategies are expected, and you can see in here that there's a lot of different results based on the different methodologies, but again, portals are having a tough time in here, and part of this is for a simple communication. If people receive a notification in their email telling them they've got a message, they then link through to the portal. They have to remember their password. They get in. They then have to find where that document is being held. That then means that, without even reading the information, I don't know if it's going to be relevant to me or if it's just a standard communication. I've gone through all that effort first before I even get to understand that, and that's where this rub lies. So if you do push communications out via a portal, within 48 hours of sending out that initial announcement notification email, the read rate is likely to be between 4% and 6% only. So comms are really your opportunity to initiate an interaction with your customer and with your portal. But the comms themselves, if they are sitting behind that login gate, they are going to limit your potential here. So if, again, horses for courses, if something requires secure, interactive, and expansive environments, then that's where the portal is in its element, and that's where it should be used, and that's where it will add value. But if it's simple, regular comms, it's not going to be giving that good value assessment from a customer's perspective. Other things to think about on here is also that processes and procedures, if they are personalized to that individual, that's fantastic. But it's very easy to try and pigeonhole a customer into saying that customer prefers email, that customer prefers post, that one uses our portal, this one likes to use a messaging platform. But in reality, we all like to use different mediums for different actions and activities. So it might be that email is great for this, but not good for that. Portal might be great for this and not good for that. So having choice is incredibly important, but also having a strategy and having a capability where you can lead with what you expect to be the preferred, but have the option to bounce to an alternate. That's where you're going to get the biggest gain. So if you have the concept of using a digital mechanism first, but then you have the ability to bounce to print, for example, that might give you the ultimate level of engagement. And that's particularly important if there are communications which are regulatory, for regulatory purposes. You need to make sure your customers are reading them. Having multimedia options is really a great way forward.
So I'm going to rush through this a little bit because we want to get to the discussion part of this session. But finally, the final takeaway was that something that was particularly shocking for us that came out during the gathering of this data with our sample of life and pensions providers, with that they had their annual active customers metrics to hand, but they had to run reports for their monthly active customers. It's not something that they track as a core KPI. Now, it seems strange to consider annual active users as active at all, really, in terms of engagement, let alone use it as a main KPI for it. If someone registers and logs in once, can you really consider that an engaged user?
Yeah, if you went to the gym once or twice a year, firstly, don't expect a six-pack. Secondly, would you consider yourself to be active? I think that's a fair challenge.
Obviously, if you want to increase engagement, you need to measure the things that reflect it. One of those things is people coming back more than once a year. You can measure monthly active customers to do this, or annual login frequency, and they're going to show you, or they're going to reflect back all of the things that you're doing to drive people from other channels into your portal, as well as the changes that you make within your portal. Then you can dive a little deeper into particular journeys, such as the one that we've talked about today, from email notification to reading a message on a portal, which we see a really high drop off with. And we've put all of the benchmarks that we found looking at this sample of life and pensions providers in our report, which we will be sending out at the end of the session. It'll come out about 1 o'clock, I think.
So time for the discussion element of today. Obviously very conscious of time as well. So before we go into that, obviously I'm someone who's worked in marketing and brand for some time, and I always think it's important to understand your audience and the types of brands which resonate with them personally. So we thought it'd be a good idea to understand what your favourite app or website is and why. So again, pop your answers into the chat. And whilst you're doing that, I'll give you my own example. So back in 2016, when Moneybox launched, I was an early adopter of that. I love it. And that's quite a strong word to talk about when it comes to brand. But genuinely, I think their time machine and roundup functionality is incredible. And it's something which I really enjoy using. So pop your answers in the chat in terms of, like I say, websites or apps that you enjoy using. And we can have a look at those at the end. And obviously with that, portals that deliver obviously more valuable services will gain more frequent engagement. But financial products or product providers whose customer relationship is typically based on one product, so for example insurance or investment, the functionality of their customer portal is often very limited for that reason. So to offer some insight into that, I thought we could start the discussion off by asking how we expand our offering with valuable services that are actually worth logging in for. And I'm going to hand over to Adam, who's going to chair this section. So Adam, over to you.
Thank you. Anyone who participates, thank you very much for doing that. We've had a couple of people who have volunteered already. First up, I'm going to cross over to Brian Moffat. So Brian has agreed to answer the first question, which is great. So Brian's regional account manager with Aegon and an old colleague of mine. The question I'm going to ask Brian is, so when financial services customers might only have one product with you as a provider, how can portals be extended to offer more value to their customers beyond this single product?
Right, I think that's a really good point, Adam, and really good to see you. By the way, I hope you can hear me okay. There's a bit of background noise where I am.
Oh, good, thanks.
But I kind of, while I answer that, I just want to add something else as well, because I had a question, and I didn't know the content of today's webinar before today, obviously, but my question related to your question is, would client portals be interested in receiving and holding client documentation from platforms? So let me explain, okay? At the moment, an advisor sets up a client on, say, a platform and trades into a GIA or whatever. The platform typically then emails the client, inviting them to create an account on the platform's client portal. And at the same time, the advisor may invite the client to create an account on the advisor's client portal. So that client has at least 2, possibly more, logons to do different client portals, okay? And as you know, platforms are already sending, valuations, status updates, transaction history, and so on to the client portals via the back office systems. So the only real benefit which the client has of logging on to the platform's client portal is to view statements and other documentation. So I thought, wouldn't it be good if that client documentation could be securely sent to the client portal providers so it can be held and displayed alongside the advisor's documentation? Maybe that's something Origo could look into. I saw Matt Noble joined the call earlier.
Yep.
And what we're thinking is that would create a better experience for the client because they'd have one login to one client portal with everything they need in the same place, okay? It'd be better for the client portal provider because it would enhance their proposition and it would increase engagement because the platforms would typically email a prompt to the client to log on to that client portal to view the documentation. And it would also be better for the platforms because we wouldn't need to, manage so many users of client portals. Bear in mind that the majority, well, I maybe shouldn't say that. Speaking for Aegon at least, we don't market to clients at all. We are strictly a B2B2C client portal. So from that point of view, it could generate a lot of savings for us. And I think if a client knew they had one portal to go to for everything from both their advisor and their platform provider and maybe their, life office and everything else, that could be a really good outcome.
Yeah. So it's consolidating into a lower number, a lower volume of services.
Yeah, exactly, Adam.
Yeah.
You'll be relieved to see Matt's already confirmed he's going to get to build on that immediately. So we'll expect that in the next 48 hours then.
Great.
And another comment is Seckle's actually doing stuff in that space, which is interesting, given documents via APIs. So that makes that sort of open interface and makes a lot of sense.
Yeah.
So just thanks very much, Brian, for your input there. On a slightly different tact, I'd like to hear from Ian Beeston of Money Alive, because Ian's been working with a number of firms looking to take some of the those standard communications and create them in a method which makes them more engaging and more personalised. So, Ian, could you just give us a bit of an intro to what you're doing and the sort of results that you're able to see from your efforts?
Testing one.
There we go. Perfect.
Yeah. So thanks for inviting me in. So what we've been doing is working with our customers to create personalized communications for their customers, which can do things like, for example, I made a note when I was listening earlier about pitching the portal. How much effort is actually put by portal providers to pitch the portal and share the benefits of the portal to their customer? And what you can do, say, through a personalized video is describe the functions that are available. And what we always do with our video experiences, we make them interactive, which automatically increases the enjoyment that the viewer experiences and also provides useful data for our customers regarding understanding. And we often kind of pitch the next steps within our communications as well. And again, this is sort of stressing the benefits of the portal. So something like that, making it an enjoyable experience, describing what is on offer, and then handing people off straight into where it is you want to go, having kind of warmed them up to do whatever action it is you particularly want to do, is something that I think personalized video has real value to. It's just one of the tools. And I have to say, I found it quite reassuring listening to the presentation because it made me feel not alone with the kind of nightmares that I experienced with the different portals I have. I think Brian's point as well about consolidating content is also very powerful as well, to give as many reasons as possible for a person to go to one place. I think, interestingly, things like annual statements. So we work a lot with pension schemes providing annual benefit statements to members. And the way I kind of think about that is annual is probably based on the way that things were communicated in the past, because obviously you have to print a load of stuff and send it out, and it's a big expense. Whereas there's no reason, I don't think, why people wouldn't want this kind of information daily anymore. And of course, if you can provide daily information that changes on a daily basis, you're creating more incentive for people to go and look in a place as well. So topical information, I think, is a value and all. But I as I say, I kind of appreciate this session because I've had one or two frustrations with some of my insurance providers. I won't name any names, but it wasn't Aegon, Brian.
And the other application from your stuff I've seen, I know, and you've had a lot of success, is education content, isn't it, as well? Trying to actually provide information and content that may not necessarily be about the subject that the portal was served up for in the first place, but give some added value. I mean, that's the sort of stuff I guess we're intrigued to understand, where people are at liberty to talk about successes or failures, because it feels like an interesting group that could probably share an awful lot of knowledge around the things they've tried and maybe ongoing. You know, at the end of the day, it's got to be to everyone's interest to try and increase, engagement with customers. So, that education content is pertinent, I think, too. And John, John's with us too.
On that point, Paul, I would say timing is everything. So you've got to pitch the education at the point that the person, it's relevant to the person, and your communication needs to sell the benefits of them engaging in that education. And it's usually about a life stage, typically, approaching retirement, for example. We've had a lot of success recently with equity release as well. Equity release education, again, I think that's all about timing. People looking to build their income in retirement. When it's relevant, people will actually put a bit of time aside. And, going back to that word enjoyment as well, try and deliver it in a way that is enjoyable. That also makes a big difference, I think.
I saw a hand go up at one point. I was just conscious of trying to take, and
we have Richard with his hand up. Let me add him in.
Okay, thanks. Yeah, without using the word, it's great somewhere to see all your plans, which will no doubt resonate with Paul from in the past. But I guess the challenge is how we get that engagement. And really, for a lot of people, you think about your financial circumstances once a year on renewal or an annual review. And it's, I suppose, it is that wider challenge of how do you get people more interested more often? I know with your bank account, you'd typically be looking more frequently, certainly towards the end of the month. You'd be looking even more frequently, possibly than earlier in the month, to see, has my paycheck arrived yet and is there enough money left?
Yeah.
But it's how do we get people engaging in that way with things which are really longer term contracts. I think the interesting one was Amazon with their home insurance ad, doing a mass market advert. And how often do people think about their home insurance the day the renewal letter arrives? So they were addressing 56 million people out of who, or 60 million people, and only a small number of people would actually be interested in buying on that day based on getting a renewal letter. Sadly, our products are generally not that exciting, but people wake up feeling like death, but you don't wake up thinking what to do about it.
Yeah, and Richard, you're quite right, and it does hark back to a topic which, trust me, is not far from my mind. But you'll see some hopefully interesting developments around that idea of a consolidated view, and the continued struggle with engagement. But it sort of goes back to the point Ian made. It's about timing, isn't it? And I guess to be timely and relevant, you need to have enough information about someone, have enough data to be timely and relevant, and that then comes back to some other problems. It's a big landscape. But
can we go to? I think we should have Vanessa from Quilter, Platform Proposition Delivery Manager, here. And the question is, what's your experience of financial services portals from your personal life? I think this is probably how all of us most feel this pain when we come to interact with portals and the many that we have.
Sorry for the mouthful of a title. Yeah, I think it's an interesting one in terms of you're always pulled in loads of different directions as a consumer. And sometimes it's difficult to know, even though you work in financial services, what's the best route to go. Because you're constantly, as soon as you download an app like Moneybox or Monzo, or even things like Chip and things like that, there are so many things out there. So I think it's trying to narrow down as a consumer what feels the most intuitive and feels easy to use and it's going to tick all your boxes, but nothing's going to tick every single one of your boxes. And then there's always a bit of stuff around like open banking where you can put in your mortgages, and then you end up seeing everything all in one place. And I think it comes back to that point around trying to kind of funnel customers down the route where they're just getting a single consolidated view of everything, rather than having multiple apps, which can be overwhelming.
Yeah, no, I agree. And I guess that also comes back to something we hinted at, which is around signposting and, trying to do what you can to lead people to, there's a phrase we use in another project called unselfish relevance, which is, sometimes you need to do stuff for your customers that may not be specifically in relation to the topics you were engaging with them at the outset, but nonetheless are of value.
Yeah.
And if you can put that value proposition at the top of the pile, then my gut feel is that will pay dividends.
And I think sometimes from a provider perspective, you're challenged by, like, we talk about engagement, but you don't want to step on advisors' toes either, because they're engaging through their portals. But it's kind of like, well, we should be doing engagement through our portal, but is that the right thing from, you're going to get challenged by the advisor on that. So it's finding a balance, I think, sometimes.
Yeah, no, I agree. That sounds I suspect the problem that a lot of providers have with the, given the channel and the intermediary sector is such an important one to them. So yeah, it makes a lot of sense. Thank you very much for your input. I think probably we're going to need to sort of close out. I thought just to close out and wrap up, this warranted a show. It's actually a post from an interesting, well, I think it's an interesting social media post actually. An assistant professor at Maryland University, Mary Garza, asked her class to put their phones on loud, and every time they received a notification, they stood up and marked on a flip chart. Now, personally, I think this is a really interesting picture, and the reason why, well, one, we live in an extraordinarily noisy world, and even university students, are showing just that amount of noise, particularly where communication is concerned. And the other was that despite that sort of younger focus on social media traffic, this age-old email still features extraordinarily high here. But really, I guess the point is, this is the landscape of communication that we're dealing with, that we all need to continually improve our services in order to keep up with it. There's an awful lot of noise out there, and as you said, Vanessa, as well, it's not easy necessarily to try and find a broader base of topics that you can keep people engaged on. Nonetheless, I thought it was interesting because obviously that age group feels like they're going to become, well, will be more and more important to us. So just closing out, a little bit about us. For those of you that don't know us, hopefully most of you do. We're a secure customer engagement solution. We work very prevalently in the financial services market, but well beyond. I'm going to bring up on screen our contact details, and then just finish by saying thanks to everyone for committing your valuable time and attending today. We will be circulating a copy of the research and the slide deck to all participants, where we've got your email addresses, so please make sure we've got those. Please feel free to reach out. We really love your continued feedback and posts from the session afterwards. I think this whole market and this whole area is going to evolve further. We'll keep you informed of any developments in our findings. There's been some suggestions about rerunning this and reviewing it periodically to see how the landscape changes. A big thank you to our digital team. There's a lot of work that gone in from Sabrina and Emily and Sam on collating the research. They permanently spend their entire lives considering human behaviour, digital engagement, how we deal with that in our processes. A big thank you to everyone for joining. I'd normally say safe travels home, but for now, have a good remainder of your day, and thanks for attending.
Cheers, guys.
Thank you very much. Bye all.
Thank you.